Yo, what's up, guys? Welcome back to This Just In. Thank you for joining me today. We have got some huge news on one of the stocks that we own. This is actually one of my favorite stocks right now, and I think that this news could really propel this thing further in the future and give us some really nice gains. So let's not waste any time. Let's jump right in. Alright guys, before we get started, subscribe to the channel, hit that bell notification so you can stay up to date. I try to post new videos every day with like growth stocks, penny stocks, anything that I think will, help us grow our portfolio and become better investors. There's a link down in the description to my Patreon account. Come join the family over there. I'm doing the first 100 patrons for just $1. We've got new people joining every day. It's amazing. You have no idea how much I appreciate it. I love you guys from the bottom of my heart. Like I never expected to get this much support, so thank you. Seeing the channel grow, you guys being a part of it is everything I ever wanted. When you come over to the Patreon, you'll get access to the private Discord where we talk stocks. You'll also get links to 4 different portfolios that I've got over there. A couple growth stock portfolios, a penny stock portfolio, and a value portfolio. You'll also get anytime I buy or sell a stock. So anytime I enter a swing trade, or I take something out of the portfolio or add a stock, add more shares, anytime I'm mapping out a chart or I've got some news or a watch list, I send that out, as soon as I get it to keep you guys, informed on exactly what I'm doing. So if you want to check that out, come join the family. We'd love to have you. It's a really great community. I love everybody over there. There's also a link down there to Webull. Set up an account, deposit $100, you get some free stocks. I get a free stock, and it helps support the channel, so I appreciate it. But let's jump in. So today, guys, we are looking at a stock that I've held for quite a while now. It's a SPAC. The ticker symbol is IPOE. They are merging with Sofi. We got a pretty big news article that came out a few days back, which I've been waiting for, and I think it is really going to help this stock grow multiples of what it would have done before they decided to go this route. So let's jump in and take a look. So first things first, Sofi is a FinTech company. They have an app. It's finance, lending. It's a really cool app, actually. They've got like an online checking account. They've got the ability to buy stocks on their app, ETFs, and then also they do lending. So, student loans, credit cards, home loans, things like that. This right here is their services that they offer. Like I said, student loan relief, personal loans. Galileo is the company that they purchased. They did an acquisition with Galileo back in April of 2020, which was pretty big. Galileo is like a payment processing company that works with some pretty big companies like MoneyLion, Robinhood, a lot of big companies like that processing all their payments. And then they've got their financial services. Like I said, Invest, Money is like their online checking account, credit card. So pretty cool company. I really like this space right now. This financials, but it's still a growth stock and it's got some value in there. I think a lot of people are kind of transitioning out of, high growth stocks and trying to move into value plays. I'm on the fence. I don't want to get caught in a value trap, and I can see that happening. A lot of people transitioning out of these tech stocks, the high growth, kind of getting into more safe, conservative value plays, which I think is great. You always want to be diversified, but I'm just worried it could turn into a value trap, a little bit down the road. But I guess we'll see what happens. In these market conditions, anything you can do to diversify and get into stocks that are going up versus going down is always a good thing. But guys, I'm very bullish on this stock. I think it's going to do very well, and I want to show you a couple reasons why. So like I said, this is their company. Let me go over some numbers with you real quick. Oh, the other thing is, we just got news that they are expected to vote on the merger for the SPAC on April 9th. That's a big catalyst there. They go out, they vote. Anybody that owns the stock will get an email. You'll jump on, vote, or call your broker, however you do it. And obviously, when that vote goes through, that's going to help push this stock up as well. But They so the couple things I want to talk about first. Let me talk about the bank charter. Guys, this is the news I've been waiting for. So they were primarily going to stick with just the financial app like I talked about. But they came out and decided to go traditional with a national bank charter. Guys, this is huge for bottom line revenue and EBITDA and margins and everything. So pretty much I'll read you a couple things here. SoFi is becoming a bank with its $22.3 million acquisition of Golden Pacific Bank Corp. Golden Pacific is a California-based community bank regulated by the Office of the Comptroller of the Currency and with $150 million in assets. A bank charter will allow SoFi to take deposits from its customers make loans using these deposits. This will allow for an enhanced value proposition for SoFi members while driving down cost versus the current process of financing their loan offerings as a non-bank. Guys, this is huge. Like I said, them doing this bank charter, let me just go over some revenue with you and so you can get an idea. So here's some EBITDA projections without the bank charter. So without the bank charter in 2021, they were going to do 27 million on their EBITDA. Then they were going to do 254 million in 2022, 484 million in 2023, 788 billion in 2024, and then jump that up to 1.17 billion in 2025. With the bank charter, it's going to add 27% to the total EBITDA and could potentially increase their market cap by $5 billion. So here's the EBITDA with the bank charter. They're going to do 42 million in 2021 instead of the 27. They're going to do 447 million in 2022 instead of the 254. So just right there, they're going to get to projected earnings or projected EBITDA for 2023 a year earlier with the bank charter. Then in 2023, instead of 484 million, they're going to do 718 million. Then in 2024, they're going to do 1.05 billion instead of the 788 billion. Or million, excuse me, 788 million, not billion. And then in 2025, they're going to do 1.4 billion instead of the 1.17 billion. Yeah. So a lot more revenue there, a lot more EBITDA, which is great. Anytime you can add more revenue to the bottom line, more EBITDA margin, that's great. Now, the other thing that I like about these guys is how rapidly they're growing their base, their members. So they've got 3 different products, like I said, right here, right? They grew their multi-product members, so members that use more than just one product, because you can download the app and you can use it just for investing in stocks. Or you can use the online checking account, you can invest in stocks, and then you can also get a loan or a credit card from them. But their multi-members grew by 220% from 125,000 members to 400,000 members from the end of Q4 2019 to 2020 Q4. And they estimate that they will have 775,000 members by the end of 2021, which is a 95% increase year over year. They're also on track to exceed 3 million total members. That is huge, guys. From 2021, they had a 75% increase year over year. They actually jumped 100 basis points more than the 74% that they did increase from its full year 2020 to over full year 2019. So they are growing their members like wildfire. Again, that Galileo acquisition was nice. Let me show you a couple things here to kind of give you an idea. So this is the different stages of their growth trajectory. They've got like the lending, which is will grow at a 25% compounded annual growth rate and give them a 58% margin. The technology platform, which is Galilea, the processing for Robinhood, Moneyline, and those guys, will give them a 55% compounded annual growth rate at a 62% margin over the next 5 years. Financial services is the big one. That's 153% compounded annual growth rate, which is amazing, fantastic. Again, shows you kind of their diversified revenue streams. You can see here that lending is going to be the biggest part of net revenue. I think they had a net revenue slide up here. Yep, let's take a look. Alrighty. So in in 2018, on their net revenue, they did 241 million. Then they did 451 million, which was 87% growth. Jumped it to 62 million or 621 million, 980 million, 1.5 billion, 2.1 billion, 2.8 billion, and 3.6 billion by 2025. That is huge amounts of revenue. What I really like to see though is look at this right here. Their adjusted EBITDA just went positive. It's going positive this year. They will do $27 million in adjusted EBITDA in 2021. Then they will jump that by 44% next year. So guys, again, when I said earlier, I really like this because it's giving you some value, because there's other companies out there that I really like Synchrony Financial, Citigroup, you know, those are some good value plays. A lot of the banking stocks are doing really well right now. So this is giving us exposure to growth stocks and value stocks at the same time. You know, it's a SPAC, don't get me wrong, it's a growth stock, you know, it's more of a growth stock than a value stock, but at the end of the day, these fundamentals are phenomenal. They're getting into the bank charter, which is fantastic. And I think we're going to see some very, very nice growth out of this stock over the course of the next 5 years. So if you plan on holding it, I think you will be rewarded. It's good. It will be volatile, but I think there's going to be some really nice upcoming catalysts, like they vote, it goes through, ticker symbol changes, they get back to doing business. You know, things like that will help move it forward. All right, so let's take a look here. Like we already went over the net revenue. Like I said, right here is when they become, you know, positive. We looked at the EBITDA. This is the difference between the bank charter and the without the bank charter. You can see the difference in revenue here. The light blue is what the bank charter will add. Let's see. There was one more thing here. This kind of shows you, you know, Q3 and historical, excuse me, historical data. 2019, they did 451 million in net revenue, and then they only did 240 million in net revenue in 2018, which is great. That growth is really nice. I will link this financial investor presentation down in the description so you can check it out. Let's go ahead and take a look at the chart. I highly recommend you go and take a look at this. It's got a lot of fantastic information in there. I try to hit on all the key points, but at the end of the day, you should always go in there, do your research, do your due diligence, and check it out. Okay, so this is the chart here. This is a 4-hour chart. You can see right here, came out, traded sideways, boom, big pop up once the merger was announced and hit a high of, you know, right around 22 bucks, and then came out, you know, gapped way up, sold off, kept running up, you know, and then right here, boom, big gaps all the way back up to the upside. Hit a high of 28.25, and then over the last you know, month and a half has just gotten absolutely annihilated, along with all of the other growth stocks. Looks like it's, you know, it went clear down almost 30, what is that, almost 40%. Let's see here from the high. So yeah, so sold off, you know, 53% total. And then as of right now, looks like you're down about 40% from the previous high. This price right here, guys, I think is looking really, really good. This $17.29, you know, $17 mark, it is down almost 5% already today. But just to get back up to previous highs, I mean, you're looking, you know, 63% in upside, which is huge. That is really nice gains. I do think that it will get back up to that upside of that $28 mark by the end of the year, especially once we kind of get out of this correction and start making our way back up towards the upside. Obviously, all of these high growth tech stocks, SPACs have just been getting destroyed. That is going to end soon. It's not going to go on forever. And I really, really like this stock because, like I said, it gives you that combination of financials and growth stock and value because the fundamentals look good. You can see it sold off here. Boom, kind of found a little bit of support right down here at the 1470 mark. Then started to try to make its way back up to the upside. I kind of thought that once it got up over the 20-day moving average, it would start getting its way back up there. But over the last couple of days, it tried. The market tried to start going back towards the top, but just kind of kept getting rejected. And it's a really choppy market right now. Real brutal out there. You got to be. This is where you find out who the casual investors are versus the real serious investors. Market sentiments like this are not fun to trade in. You've got to really have conviction in your plays. You've got to do a lot of due diligence, and you really got to be a shark out there and finding the stocks that are going to do well. I am going to be doing a little bit more diversification today. I'm going to get rid of some of my growth stocks that are down and try to transition and do some other things over the course of the next few weeks. I do think that there is light at the end of the tunnel, and we will start to see this bull run continue here in the next month or so. This is not going to go on forever. Bull markets end up lasting much longer than bear markets do. I don't think that we're in a full-blown bear market right now. We are for growth stocks, but not market-wide. We're not in a market crash. I don't think we're going to get there yet. Maybe looking out 2023, the middle of 2022, I could see us start to, maybe run into bear territory a little bit, but I don't think so right now. But by the time we do get there, everybody on this channel, we're going to be eating. We're gonna stay ahead of the curve. We're gonna continuously do our research, do our due diligence, and make sure that we're not behind the eight ball if a crash does come. But yeah, take a look in here. It looks like it is starting to come down, and maybe it'll find support right here today. I do think that if you don't currently own this, I would probably wait to see if it's going to come back down and fill this gap right here. I don't know if it will, but that would look nice for a better entry. At the end of the day, this $17 mark right here, if you plan on holding this stock for the next 2 to 5 years, I think you're going to end up in a very nice position long term. I would put a price target on this stock within 24 months to be around $40 to $42 within 2 years, not right away. I do think by the end of 2021, it will get back up and see its previous high of around the $28 mark, if not 30. Once the merger, vote goes through, it gets confirmed, the ticker changes to SoFi, it starts, doing business together, and then that bank charter goes through. Everything's in the clear with that. They did do that acquisition with the Los Angeles Rams stadium, and I think they spend like $20 million a year, which they caught a lot of controversy for, to put their branding all over in the stadium. And I think they did it for like a multi-year deal to pay and be advertised in there. So that's going to give them a lot of exposure. The way that you see those accounts and those multi-member products growing, and they're about to hit 3 million members, gives me a lot of hope and a lot of faith in this company. Again, guys, it's one of my favorite plays. Chamath is one of my favorite investors. He's a beast. He brings these SPACs out and they do really well. He's been catching a little heat lately, and the SPACs have been kind of getting beat up, but again, it will pass. I want you guys to kind of keep in mind, when you are looking at charts like this, come in, look at where the gaps are, take a look at where you're going to run into support and resistance. If you want to see some more, in-depth chart analysis, stuff like that, come join us at the Patreon. We're going to be doing a lot more of that over there. If you have any questions, put them down in the comments. If there's any ticker symbols you want me to cover, let me know. I'll definitely take a look at them, and if it's something I like or it stands out to me, I'll try to get it into a video. But that's it for today, guys. I wanted to keep the video really short. I will be recording another video right after this because I did miss yesterday. But thank you guys so much for watching. I really appreciate it. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always go do your own, research and due diligence. Don't just take my word for it. And then come join me at the Patreon. Come join the family. We're growing this channel like crazy. You have no idea how much it means to me. Your support is everything. I try to bring you as much value as I can, so I try to be in the Discord as much as I can to answer questions or give input or anything like that. I'd love to see you come over and join the family and help us grow this channel. But that's it, guys. Thank you so much again for watching. I hope you have a wonderful day. Enjoy this Friday. Enjoy the market. And I will see you guys in the next one. Peace.